Everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 12th of January, 2018, and the market's had another strong week here, bringing our year-to-date gains. Very impressive here. We've got a great jump on the new year, and as I mentioned late last year, the only thing that changes with a new year is the calendar and the level of noise that we hear from people who think that they're talking about market news. The fact is, we remain in an uptrend as we were last year, and there's nothing here to suggest that those trends are about to end. Here's our year-to-date volume-weighted average price on the S&P 500, looking at this 15-minute chart, meaning each candle represents 15 minutes. And you can see that this week we did pull back briefly, but to that rising 5-day moving average, and buyers re-emerged to take back control after it stumbled below this week-to-date volume-weighted average price. So again, at record highs, only a fool looks for the place to short here realistically, because everyone has been run over short in this market unless you're just scalping for a very short-term period of time. So next week, our first level of potential support on a pullback would be right here at about 275. That's where we have that rising 5-day moving average, this prior peak, and the volume-weighted average price from this week. If we were to see a deeper pullback down towards the volume-weighted average price year-to-date, I think that is very likely that any short-term quick pullback to the year-to-date volume-weighted average price will be, in fact, a place to buy the market for a bounce. The NASDAQ also at a new all-time high here. We can see our week-to-date volume-weighted average price. We were below briefly on Wednesday, but did hold above this rising 5-day moving average. As I always say, for an intermediate-term perspective, the direction of the 5-day moving average should dictate the direction in which we trade. When it's rising, we give the benefit of the doubt to the buyers. When we get extended from that 5-day moving average, we get a little bit more cautious and don't chase things, but clearly it's better to be in the market, rather on the sidelines in cash, rather than arguing with the market with a short position. I'm going to briefly talk about some cryptocurrencies because, as I've mentioned, I'm adding those to the analysis of alpha trends this year. Bitcoin right now, you can see we've still got a rising 50-day moving average, but it's below this 10 and 20. Last week I suggested that people did not want to chase the breakout. So what we have here is a daily chart with a 10, 20, and 50-day moving average. We've got a 4-hour chart with a 5, 10, 20, and 50. And then down here at a 2-hour chart, we have a 5-day moving average. So same thing. I don't want to be a buyer. I suggested maybe we're going to see support near that 50-day moving average, but I didn't want to buy it because I don't like to buy weakness. What I want to do is see this market, rally up maybe to 15,000, pull back to 14.7, see that 5-day moving average flatten out, and then perhaps begin the next leg higher. And same would go true for Litecoin, which is still above its rising 50-day moving average, but below that declining 5-day moving average. I don't think you want to buy it. So I'll continue to update that as appropriate. But as I mentioned, that's going to be a very small part of what Alpha Trends is. Alpha Trends is focused on individual stocks and trading those from a swing trade perspective. So that's what our focus will always be. It's not going to turn into a day trading, cryptocurrency service. The Russell 2000, very impressive this week. It finally broke out. I was mentioning to subscribers earlier this week that, the energy was building. We had these higher lows, and we saw more repeated tests of resistance with a rising 10, 20, and 50-day moving average. I thought maybe it was going to start to catch up to the performance of the broader market, and it did. However, on Wednesday, after Tuesday's close, and Wednesday, I was thinking, well, maybe this thing's just going to grind like it did last year. If you recall, there was only a really brief period of a real nice trend higher last year in the Russell 2000. The rest of it was really all of 2017 just kind of grinding higher here. It took a shakeout below this prior low and the rising 200-day moving average for it to build enough short position and get the weak hands out for a rally to emerge. Anyways, back to where we are with the Russell 2000 now. We can see here that Looking at a 15-minute chart, we're well above the year-to-date volume-weighted average price. We're above the 5-day moving average, and the week-to-date volume-weighted average price, anchored from the beginning of the week, is down near 156. So maybe we got a little bit ahead of ourselves today, but I would think that any pullbacks are likely to stay above 155 and a half, and you give the benefit of the doubt to the buyers as long as it remains above that level. Semiconductors lost a little bit of ground this week, and it's surprising that the Nasdaq was able to finish at a new all-time high with the underperformance in the semis. But each market on its own merits. I don't trade relationships and theoretical relationships. Instead, we want to trade on the price action of what we trade and what we see in that particular market. The semiconductors rallied up to the declining 5-day moving average. I think that on the daily time frame, we came down and tested the 50-day. I think that this market is likely to kind of stay in a range 100 to 103 for a couple weeks, and then perhaps it can start to rebuild for some upside. But it's had a massive run over the last couple of years, and certainly it deserves at least a rest here before we can say that there's a problem with it. The biotechs behaved well, and they were back above the volume weighted average price from this peak last year, from this peak, from this low, and of course we are also above the volume weighted average price from last year. In fact, the fourth quarter test of that yearly VWAP last year showed that there were still buyers in that area, and of course we've got a 200-day moving average that's rising in there. From its peak, we're also above that volume weighted average price. So the biotechs are behaving well, and I think that if you look at some of the individual components, one for instance is Biogen on a weekly chart, you can see here they had a sharp sell-off in 15 and 16, and then this prior resistance, it seems to be holding a support right now. We've got a rising 10, 20, 30, and 40-week moving average. So it looks like we're now in a new stage 2 uptrend on the weekly time frame, meaning that it's likely over time, maybe the next 3 to 6 months, to head up towards that 380-ish level. So keep an eye on this one, but as always, know your time frame. We've got this little consolidation in here on the daily time frame. That's good to see, especially with diminishing volume. Going down to a 30-minute time frame, the picture's a little bit sketchier if you ask me, because we've got a lot of volatility in here. So I think it needs to settle down a little bit before you buy it, or of course know what your time frame is. As a swing trader, I personally am not interested in it. We did buy a biotech stock this week, which was ATRA, based solely on the chart. The weekly time frame looked like they had worn the buyers out, the sellers out rather, and we got involved on this one at $18.70 per share. That was on this day right here. We had taken initially 55 cents off of it as it ran up and hit daily R2, and today we sold another third of it as it broke a 2-minute low right up in here. So that was good for a gain of $10.15 per share, just in $10.30 per share at $29. We over the course of 4 days in that one. I think that you have to look at a lot of people are talking about Facebook and the breakdown in here that we saw today. We've still got a longer term uptrend in here. I think you want to keep an eye on things like the trend line that it's had, and basically a trend line isn't as Larry McMillan taught me, it isn't drawn with a straight edge but more a crayon. So this is a potential band of support. If you take a look at the volume weighted average price off of the September low, we fell just short of that today, and off of this peak, it suggests that yes, this is a potential level that it's likely to slow down in near this 176, 175-ish level. Twitter, we've had some great trades at Alpha Trends on this one, buying it right in here, getting out of our last piece, stopped out there, buying it in here and getting stopped out of the last piece up in there, and we've been waiting for it to break above the volume weighted average price in a low risk way. It hasn't done that, but the volume weighted average price off of the gap on the 18th and off of the peak, it finally gapped above that this week, putting the buyers back in control. So you look at this and say, what would it take to get going? Well, from a shorter term perspective, you might want to buy it in this area or above this level with a stop, I'd say just underneath this prior little peak right here, or worst case down near the 24.50 level. Looking at a weekly time frame on Twitter, as we have, I had mentioned that this level was, back 4 weeks ago, was likely to be a place for this momentum to slow down because it was the volume weighted average price off of this peak. Well, here we are 4 weeks later, and it's finally back to challenging that. If it can get back above that and hold above it, I think that you're looking for potential levels up in these areas. So basically, up to 28 to $30 a share looks like the potential upside in Facebook. So one other thing I wanted to point out quick, bonds, there, a lot of people were talking about the bonds, and let's just talk about it from year to date. Look at how the TLT has behaved. It gapped lower on the first trading day of the year. It stuck below the declining 5-day moving average in here. And then on this rally, after the gap down that we saw on Wednesday rather, it's rallied up where right to the year-to-date volume-weighted average price and seems to be finding some resistance there. So it doesn't matter if it's stocks or bonds or whatever, that anchored volume weighted average price is an invaluable tool which I could not imagine trading without. Enjoy your long weekend. Don't forget that Alpha Trends does have a sale on subscriptions right now through February 4th. Please take a look at alphatrends.net for more details about that.